Okay, thank you. Now I want to start a video on income tax, law, practice, and tax planning. Assessment year 2020, 2021, and assessment year 2021, 2022. Now the relevant assessment year is 2020, 2021, but as far as income tax syllabus of Calicut University MCOM third semester is concerned, you have to study both the assessment year 2020-21 and the assessment year 2021-2022, as the syllabus includes tax planning. Therefore, you have to study assessment year 2020-21 and the assessment year 2021-2022. Okay. First of all, we may discuss about tax planning. What is tax planning? Tax planning is one of the important items you have to study as part of your syllabus for MCOM third semester, Calicut University, income tax. Tax planning assumes significance in a growing economy like India. We need concrete tax planning measures to strengthen our industries and savings. We need tax planning, not tax evasion and not tax avoidance. We need tax planning and tax management. We need tax planning, tax management, and tax administration. We need not need tax evasion and tax avoidance. Please avoid tax avoidance measures and tax evasion measures. That is a need of the hour. Our country needs tax planning. Okay? Tax planning from salaried persons, tax planning from pensioners, tax planning from corporate houses are needed to avoid tax costs and increase profitability and preserve our wealth and asset. Then, we may discuss what are the important areas in which tax planning are required. Otherwise, what are the important areas of the tax planning you have to consider? Okay. Concept and significance of corporate tax planning, tax avoidance versus tax evasion, techniques of corporate tax planning, tax concession, special business situations are the various areas of tax planning you need to concentrate. Okay. As a MCOM third semester student, first of all, you have to understand what are the differences between tax planning, tax avoidance, tax evasion, and tax management. First of all, you may discuss about tax planning, tax avoidance, tax evasion, tax management. Okay. There are some fundamental difference between those four concepts. First concept, tax planning. Second, tax avoidance. Third, tax evasion. And fourth, tax management. Then, what is tax planning? Tax planning is a way to reduce your income tax liability by taking full advantages provided by the Income Tax Act 1961, the Income Tax Rules 1962, and the relevant Finance Act. Now, the relevant Finance Act is the Finance Act passed by Indian Parliament on March 28, 2020. That is the relevant Finance Act. Tax planning is a way to reduce your income tax liability by taking full advantages, full concessions, full exceptions available under the Income Tax Act rules and Finance Act. Tax planning is an effort to reduce your tax by taking advantages of deductions, exemptions available under the chapter income from salaries, income from house property, income from business or profession, income from capital gain, income from other sources. If you want to take the deduction under section 80C, 80D, 80U, etc., then that type of exercise is known as tax planning. Okay. Then, if you want to donate to Kerala Chief Minister Relief Fund, that is tax planning. Okay. If you contribute the amount to your PPF, that is a measure of tax planning. Then, What is tax avoidance? Assessee legally takes advantages of the loopholes in the act. That type of exercise known as tax avoidance. Here, the assessee legally take advantages of the loopholes in the act. There are some loopholes in every act. Likewise, there are some loopholes in Income Tax Act also. Here, the assessee takes advantages of the loopholes of the Income Tax Act rules and the Finance Act. Then, another exercise, that is tax evasion. It is a criminal offense. What is tax evasion? Reduce taxability by deliberately suppressing income or sale or by increasing expenses, etc., which result in a reduction of totaling of the assessee. It is a deliberate attempt. It is a deliberate attempt from the assessee. It is a criminal offense. Here, the assessee deliberately suppressing his income or sale or deliberately increases his expenses. That type of mechanism is known as, this is not a mechanism, that type of offense is known as tax evasion. So what is tax management? It is a procedure to comply with the portions of the law. It is an implementation stage. Tax planning is the planning stage, whereas tax management is the implementation stage. Implementation of the tax planning measures is known as tax management and tax administration. Okay. Then, object. What is the object of tax planning? To reduce taxability by applying script and moral of law. If you comply the script and moral of Income Tax Act rules and Finance Act, then your exercise is tax planning. Then, what is tax avoidance? To reduce the taxability to the minimum by applying script of law only. Here, the assessee complies only the script of law. He forgets the moral of the law. Okay. Then, tax evasion. To reduce the taxability by applying unfair means. If an assessee has resorted unfair means to avoid its taxability, that type of exercise known as tax evasion. Okay. To comply with the portions of Income Tax Act, that is known as tax management. To comply with the portions of Income Tax Act, that is known as tax management. Okay. Then another difference. Tax planning, it is futuristic and positive nature. It is for long term. Tax planning is futuristic, positive, and is for long term. While tax avoidance is also futuristic but short term in nature. Then tax evasion, it is concerned with the past and applied after the liability of tax has arisen. Tax evasion is concerned with the past. It is not for future. It is not concerned with the future. It is concerned with the past. While tax management is a continuous approach which is concerned with the past, present, and future. Tax management and tax administration is a continuous approach which is concerned with past, present, and future. Then, tax planning is tax saving. Tax planning is tax saving, while tax avoidance is tax hedging. But tax evasion is tax concealment, is a criminal offense. Tax management is tax administration. If you uses the benefit of law, this is known as tax planning. If you uses the loopholes of the law, that is known as tax avoidance. If you overrules the law, that is known as tax evasion. If you implement the law, that is known as tax plan management and tax administration. Okay, thank you.